Welcome back. Today I want to talk about the source documents. So we shall going to start with quotation. So what is quotation? Quotation is used to let a potential customer know the cost of good or services before they decide to purchase them. So those are the term of a quotation. What about a purchase order? This is a commercial document issued by a buyer to a seller indicating types, quantities, and agreed price for products or services the seller will provide to the buyer. Then we have statement of account or the account statement. It's a record of the transactions that have occurred on a customer's account during a specified period of time. Then we have another source document called remittance advice. This is a letter sent by a customer to a supplier to inform the supplier that their invoice has been paid. What about the receipts? Receipts are raised by the firm and issued to the customers or debtors when they make payments in form of cash or checks. We have petty cash vouchers. They are usually a small form that is used to document a disbursement from a petty cash fund. Mostly it uses the impressed system. Then you have the sale invoice. This document is sent to request payment for monies owed for goods that were delivered or services that were rendered. We also have a purchase invoice. It's released by the creditor and sent to the firm when the firm makes a credit purchase. A credit notes. It is raised by the firm and issued to the debtor when the debtor returns some goods back to the firm. Then we have a debtor note. It is raised by the creditor and issued to the firm when the firm returns some good to the creditor. Bank statement or the account statement. It's a summary of financial transactions which have occurred over a given period on a bank account held by a person or a business with a financial institution. So those are the source documents. So right now we talk about books of original entry or the journals. So a journal, we can say it's an accounting record that is used to record the different types of transactions in chronological order or date order. So there are various types of journal. We can start with the sales journal, which is a special journal where credit sale to customers are recorded. Purchase journal is a special journal where credit purchases from customers are recorded. What about returns inward journal? We can also call it sale returns book. This is also a special journal that is used to record the returns from debtors and allowance of goods owed on credit. Returns outward journal, we can also call it purchase returns book. It's a special journal that is used to record the returns to creditors and allowance of goods purchased on credit. The cash book. is used to record the receipt and payment of money by the business in form of cash or through the business bank account. So that is what we call a cash book. The petty cash book is a special file that is set up and used for minor and unanticipated cash expenses, where a check can't be written or the amount is so small that you don't want to write a check. This is what I've said that it involves the imprest system. The imprest system is a system of accounting operates on a simple principle that the cashier is refunded the exact amount spent on the expense during a particular financial period. So he is refunded the exact amount spent on the expenses during that period. Then finally, we have the general journal. This one is used to record unusual or infrequent types of transactions. Let's now discuss about computerized accountings. So, what are the objects of introduction of computers in accounting? We can say it is a labor saving. Why is it a labor saving? Because the main aim of introduction of computers in accountings, it is to save on labor costs or increase in the volume of work handled by the existing staff. Then you have the time saving. Their computers should be used whenever it is important to save time. Accuracy. Using computer, work can be done without any errors or mistakes. And also it helps to locate the errors and frauds very easily. We have a minimization of frauds. So computers are mainly installed to minimize the chances of frauds committed by the employees, especially in maintaining the books of accounts and handling cash. We have effects on personnel. Computer will reduce the hardness of work and fatigue and do that to the extent to improve the morale of the employees. There are also the need for computerized accounting. So when you use computer, it arises from the advantage of speed, accuracy, lower cost of handling the business transactions, among others. We have the numerous transactions. So it's also another object. It is capable of large number of transactions with speed and accuracy. Most would help in instant reporting. It is capable of offering quick and quality reporting because of this speed and accuracy. Reduction in paperwork. Manual accounting system will require large storage space to keep accounting records book and vouchers and documents. But with computer, there is that minimal paperwork. Flexibility reporting or flexible reporting. It is capable of generating reports of any balance as when required and for any duration which is within the accounting period. We also have accounting queries. This is based on some external parameters. For example, a query relating to overdue customer accounting can be easily answered by using a structured query language, that is SQL. Support of database technology in computerized accounting system. So this one would be very difficult and expensive in manual accounting system, but with the computer it become instant. And also online facility. Computerized accounting system offer online facility to store and process transaction data so as to retrieve information to generate and view financial reports. We have security. They are highly secure and the data and information can be kept confidential when compared to manual accounting system. The last and not the least, scalability. The system can cope easily with the increase in volume of the business. It will only require additional data operators for storing additional features. Let's look at the special features of computerized accounting system. First, it leads to quick preparation of accounts and makes available the accounting statements and records on time. Another one, it ensures control over accounting work and records. Then errors and mistakes will be at minimum. Another special feature is maintenance of uniform accounting statements and record is possible. Then easy access and reference of accounting information is also possible. Then we have flexibility in maintaining accounts is possible. Hope you are getting to make your screenshot and make some few notes in your books. Another one is it involves less clerical work and is very neat and more accurate. As well, it adapts to the current work and is very neat and more accurate. Then it adapts to the current and future needs of the business. Finally, it generates real-time comprehensive MIS reports and ensures access to complete critical information instantly. So those are the special features of computerized accounting system. So we can also look at the requirements of the computerized accounting system. We have two: accounting framework and operating procedure. For the accounting framework, a good accounting framework in terms of accounting principle, either coding and grouping structure, is a precondition. This become application environment of a computerized accounting system. So we need that accounting framework. For the operating procedure, a well-conceived and designed operating procedure blended with suitable operating environment is necessary to work with the computerized accounting system. Especially the computer accounting is one of the database-oriented application, while in the transaction data is stored in well-organized database. So let's go ahead and look at the benefits of computerized accounting. So which are these benefits? We have better quality work when you use computerized. The accounts prepared with the use of computers are usually uniform, neat, accurate, and more legible than manual job. We also have a lower operating costs. It's a labor and time-saving device. So the volume of job handled with the help of computer will result in economical and low operating costs. Improved efficiency. Computers will bring speed and accuracy in preparing the records and accounts, thus increase the efficiency of workers. Another one is facilitate better control. From the management point of view, greater control is possible and more information may be available with the use of computer in accounting. You have greater accuracy. Computerized accounting ensures accuracy in accounting records and statements. Also, it will relieve monotony. It reduces the monotony of doing repetitive accounting jobs, which are tiresome and time-consuming. Also facilitate standardization. It will facilitate standardization of accounting routines and procedures. Then minimizing mathematical errors. Doing mathematics with computers, errors are virtually eliminated unless the data is entered improperly in the first instant. What are the disadvantages of now using this computerized accounting? There is that reduction of manpower. So it will reduce the number of employees in the organization, which will lead to greater amount of unemployment. The higher cost. A small firm cannot install a computer accounting system because of its high installation and maintenance cost. Then it will also require special skills. It will call for highly specialized operators. Then we also have other problems such as frequent repair and power failure may affect the accounting work very much. So those are the disadvantages. What about the challenges or the problem faced in computerized accounting system? We have user training. The users of using computer accounting software, they need to understand the concept of the software. Hence they should undergo proper training. Another challenge is system dependency. Using a computer solution makes the user to depend fully on the computer system and necessitates the availability of computer at all times. Then we have hardware requirements. A full-fledged computer system with a printer is required to operate the computerized accounting system. So we need additional hardware. System failure. So when the system crash, e.g. the hard disk crash, there is the high risk of losing the data available on the hard disk drive at any point of time. We also have backups and prints. So backups of the data should be done regularly so that when data is lost, it can be restored from the floppies or the backups. We also have the vouchers management. So accounting software allows easier alteration of data. So if a voucher is wrongly placed in a long head, it will be very difficult to sort out and bring back to the voucher. So a good voucher management is very essential. Lastly, we have the security. So additional security has to be provided because improper handling of the system, the hardware, the software could be very dangerous. So password logs, etc. have to be set so that no unauthorized person can handle the system. So those are a few challenges of using computerized accounting system. So I'd like now we talk about the journals, the book of original entries. We shall discuss how they are done and some of the examples. So we can start with the sale journal, what we call the day book. So first, we are going to look at the steps in generalizing the credit sales. So step 1, we are going to enter in sale invoice. That is the first step. Step 2, should list the credit sales in journal, in the sales journal throughout the period. Then step 3, post to data account throughout the period. So if it's the sale ledger or the data account, you debit the sales. Step 4, you transfer the total sale account at the end of the month. So in the general ledger, you are going to credit. So let's look at an instruction here. So in 2020, July 1st, we sold goods on credit to Fish for shilling 100. Then July 15, credit sale to Yemi, shilling 200. And July 25, we sold stock for credit, shilling 300 to Lali. So in our solution or the sale journal, it has to have a title. So we should have a title sale journal, then include date, details, invoice, number, and the folio and the amount. So the folio, you can skip the folio number, but sometimes you need to write it. So here you have the date 2020 July 1. The details is the person, so the fish. Invoice 1, we can talk about the folio as SL or the sale ledger. Then amount 100. We go to July 15. Credit say to Yemi for 200. And then you have the July 25 for Lali, which would be invoice 3, SL, and 300. So we have indicated all this in our sales journal. So on July 31st, we need to do the step 4. We transfer the total to sale account at the end of the month. So transfer to sale account. We are going to transfer the total of this to the general ledger, which is 600. And remember this, we are going to credit. So that is all about the sale journal. So these are the processes, or the steps. You have to enter the sale invoice, then you list the credit sale in sale journal throughout the period. You post to data account throughout the period and you transfer to the sale account. So that is all about the sale journal. So any question? Please, if you have any question regarding any topic or any subtopic, please comment below and I'll answer that. I can also give a personalized teaching or study time. Let's look at the purchase journal. So we are going to look at the same steps as a sale journal. So for the purchase journal, the steps in generalizing the credit purchase. Step 1, enter the purchase invoice. Step 2, you list credit purchases journal throughout the period. Step 3, you post to creditor account throughout the period. So you have the purchase ledger or the purchase account, you have the creditor account. So we are going to credit the purchase. As we are told, you post to the creditor account. Then step 4, we are going to transfer this total to purchase account at the end of the month. So in our general ledger, we are going to debit the total, as you can see. So in our illustration, let's look at 2021. So on August 1, we had a credit purchase from Kamau, shilling 400. Then August 20, goods were purchased on credit for shilling 500 from Hami. And August 27, we bought good on credit, shilling 600 from Clem. So in our purchase journal solution, we also have to have a title and these details. So you have to have a date and details, invoice, the folio, and the amount. So we have been to that on August 1. We had a credit purchase from Kamau. So August 1, Kamau, invoice 1. Then the folio we can talk about the PL, the purchase ledger. Then shilling 400. August 20, goods were purchased on credit for shilling 500 from Hami. So Hami, and then we have the 500 shillings. August 27, we bought goods on credit on Clem from Clem, 600. So after doing that, we go to step 4. We transfer the total to purchase account at the end of the month. So August 31st, we are going to transfer the total to purchase account, which is 1500. And this one we are going to debit. So you remember those are the two differences. So in our credit account, we are not going to credit, it's debit. On our purchase account, we are going to debit. So in our credit account, we credit the purchase, but in our general ledger, the total we are going to debit. Hope you have understood that. So that is about the purchase journal. So any question from that? I think it's well understood. So let's go to the sale returns or return inwards playbook. We are also going to do the same. We start with the steps and then the illustrations. So step 1, our step in generalizing the returns inwards. So we enter in credit notes. Here you have to start the credit notes. And then step 2, we list the return inwards in return inward journal throughout the period. Step 3, we post to data account throughout the period. So in our sale ledger, the data account, we are going to credit the return inwards. Then in step 4, we transfer the total to returns inward account at the end of the month. So in our general ledger here, the return inwards account shall be debited. So that is what we are going to do. So if we can take a short illustration here, let's look at 209. In July 6, goods were returns from Yule for shilling 10. July 13, return goods from Jelly for shilling 20. July 26, return inwards from Lale, shilling 30. So the solution is the same. We have the title, the return inwards journal. So you have to have the dates, the detail, the note, and the folio and the amount. So the date you have July 6. So goods were returned from, or the return inwards by Yule. So this is the sale ledger. So we can talk about the folio to be SL. So shilling 10. July 13, returns from Jerry, shilling 20. And July 26, we have Lale, which is shilling 30. So the total on July 31st, we are going to transfer the total to return inwards account at the end of the month. So in our general ledger, we are going to transfer the 60. So we are going to debit that, the 60 shillings, as you can see. So those are the steps and an illustration from the sale returns. So let's look at the purchases. Purchases returns or returns outward journals. So we start with the steps in generalizing returns outwards. So step 1, we enter the debit notes. Then step 2, we list returns outwards in returns outwards journal throughout the period. We have to list them. Step 3, we post to creditor accounts throughout the period. So in our purchase ledger, here the creditor account, we are going to debit the returns outwards. In step 4, we are going now to transfer the total to returns outward account at the end of the month. So the general ledger, our return outwards account will have to, we have to credit the total. So let's look at these instructions. In 209, July 9, goods returned to cannot for shilling 40. We have July 14, we return goods to Harlot for 50 shillings. July 22, we have returns outward to Clement for shilling 40. So solutions, the same way we have to have this title returns outward journal. So we start with the date, details, note, folio and amount. So July 9, the details is goods returned by cannot, so shilling 40. Then July 14, return goods to Harlot for shilling 50. We have July 22, returns outward to Clement, so for 60. So the total, we are going to transfer the total to return outside account. So transfer to returns outward account will be 150 shillings, and which will be credited. So we are going to credit that. So that is all about the purchase returns. Let me give you a moment to take some notes on that. Another thing that I'd like we talk about is the cash book. So we have two types, the 2-column cash book and the 3-column cash book. So I can start with the 2-column cash book. So the 2-column, the cash at bank cash book and the cash in hand cash book, they are combined together. So you have to combine these together, the cash bank and the cash in hand. So to do this, we need to understand using illustrations. So let's look at an illustration here. So write up a 2-column cash book from the following details and a balance of as of the end of the month. So in 209, 203, 1st May. So we started a business with the capital in cash for 1,000. May 2, we paid rent by cash 100. May 3, F Atieno lent us 5,000 shilling paid by check. May 4, we paid B Omoro by check for 650. May 5, cash sale for shilling 980. May 7, N Mwangi paid us by check for 620. May 9, we paid B Musau in cash for shilling 220. May 11, cash sale paid directly into the bank for shilling 530. May 15, G Mugaka paid us in cash 650. Then May 16, we took 500 out of cash deal and paid into the bank account. May 19, we repaid F Atieno 1,000 by check. May 22, cash sale paid directly into the bank shilling 660. May 26, paid motor expense by check shilling 120. May 30, we withdrew shilling 1,000 cash from the bank for business use. And May 31st, paid wages in cash 970. So before I go to the solution, I'd like you to take a screenshot or record this so that you get this information as we do the solutions. I think you have copied. So let's do the solution. So this is the format. We have the cash book. We need to have the details, the date, the details, the cash in hand and the back, the cash at bank. Then the second, so this is we can talk about the debit side. So on the credit side, you have the date, the details, cash and bank. So those are the two. We are combining the cash in hand and the cash at bank. So we are going to start with the first statement, May 1st. We started business with capital in cash for 1,000. So capital, cash. So you have cash for 1,000. We write it there. Then we paid rent by cash for shilling 1,000. So this is an expense. So on the credit side or the right hand side, we are going to indicate rent. We paid it on cash for 100. So that is May 2. So on May 3, F Atieno rent us 5,000 shilling. We paid by check. So this is a loan. So we indicate it on our left hand side. So our F Atieno loan, we are going to we paid by check. So we are going to indicate on the bank the 5 5,000. And then we go to May 4. We paid Omolo by check. So Omolo, we paid Omolo. As you can see there, on the right side, hand side, we are going to indicate the Omolo. This is a payment. So we paid by check of 650 on the cash at bank. Then on May 5, we have the cash sale. So we sold. So those are revenue. So we put them on the right left hand side. So on the left hand side, we are going to have sales for shilling. It is cash. So cash sale for 980. And then we have N Mwangi paid us by check. So N Mwangi paid us by check. So we got some revenue here for check, which is 620. N Mwangi paid us. Then we also paid B Musau. So we did some payment. So on our right hand side, we paid Musau in cash. So in cash, it is 220. Then we also Mugaka paid us. So we got some. And before that, we have the May 11. So May 11, we have cash sale. The cash sale were paid directly into the bank. So cash at bank, we have 530. Then you have Mugaka who paid us by cash. So that is 650. And then we also took 500 shilling out of the cash till and paid it into the bank account. So this is a contra. So we took shilling out of cash. So in our cash contra, we got 500, which we paid it into the bank account. So on our left side, we are going to indicate the 500, the cash. See, this is cash contra, and bank contra. We have to indicate where the money is coming from. So the 500 shillings. Then we have we also repaid Atieno the loan that he had given us. We paid 1,000 by check. So cash at bank, we indicate 1,000. And then you have cash sale paid directly. The cash sale paid directly into the bank for 660. Then paid motor expenses, the motor expenses by bank, by check. So that is cash at bank, we indicate the 120. Then we also have a withdrew of shilling 1,000 cash from the bank for business use. So we also have this another contra. So we withdrew cash from the bank. So cash from the bank we withdrew 1,000, and also now the bank contra on the left side, which was for business use, we're also going to indicate the 1,000 shillings. Then we also paid wages in cash. So the cash we're also going to indicate here, and the for 970. Okay, let's continue. So we need to add this. We need to add the total of cash on our left side and on our right side, bank as well. So here the total will be, for the cash, the total will be that 3,630, for bank 7,310, and they should be equal on both sides. So as you can see, we have 3,000 or 3630, 3630 and 7010 on both sides. A minute so that I can charge. Okay, we can continue. So this is what a two-column cash book look like. So the same thing will happen to a three-column cash book. So we are going to add, there are two things we are going to add here. One on the left hand side and the other one on the left hand side. So one on the left, one on the right. So we are going to introduce something called discount allowed and discount received. So for discount received, we are going to credit the creditors, and for discounts allowed, we are going to debit the debtors. So the debtors, we are going to put them on the left hand side, and the discount received, we are going to put it on the right hand side. So the title or the heading should look like this. The same case as the two column. So we have the date detail. Now we indicate the discounts allowed. Then you have the cash and the bank. The right hand side, you have the date details, discount received, cash and bank. So anytime we see a discount received, we indicate on the right, allowed on the left hand side. So this is all about the cash book, the two column and the three column cash book. So anybody who has a question so that we can continue? You can indicate that on my comment. So there is also something that I would like to discuss before we go on. So about the contra. So sometimes cash is deposited in the bank and sometimes cash is withdrawn from the bank for use in the office. So in this case, the entries both for receipt and payment will appear in the cash book itself in appropriate columns. So these transactions are the one that we know are known as contra transactions. Those are the one that I was indicating as cash C and cash or the bank C, the contra. So they have to appear in both sides, on the debit side or the left hand side and the right hand side or the credit side. Okay, we can move on. So let's look at the petty cash book. So for us to understand this, we are going to take this illustration. So the following is a summary of the petty cash transaction of Mboga Limited for May 2010. So we received from cashier 300 as petty fruit. So in May 2, we did some postage for 10,000. Then we have some traveling for 12,000. Cleaning 15. Petrol for delivery van 22. Traveling 25. Stationery for 17. May 11, cleaning for 18. Postage for 5. Traveling for 8. Stationery for 9. Cleaning 23. Postage for 13. Delivery van 5,000 mile. Services for 43,000. Petrol for 18. Cleaning for 21. Postage for 5. Petrol for 14. So you are required to rule up a suitable petty cash book with analysis column for expenditure on cleaning, motor, expense, postage, stationery, and traveling. So that is what we are going to do. So we need a petty cash book for this. So a minute so that you can take a screenshot. So our petty cash will look like this. So we need a Mboga Limited petty cash book as our title. Then you have the receipts. So then you have the date of all the things that we did that were done. So then you have the total. So then we are going to prepare the columns for expenditure on cleaning, motor expense. We have the postage, stationery, and traveling. So let me take you through from day one. So I received from cashier 300 as petty fruit. So the balance brought down. So was 300. That is what we got. On May 2, we did some postage for 12,000. So our heading, we have 3 zeros there, so I'll be writing only the first digits. So we did some postage for 18,000. So postage get 18, and also the total you have to indicate it there. So we 18, so the rest will be 0. We did some traveling for 12,000, as you can see. So on day 3 did some traveling 12,000. Cleaning we did for 15,000. Petrol, that is a motor vehicle expense, so we are going to indicate it on motor expense. From there we have traveling 25. We have stationery for 17,000. I have them. Cleaning again on date 11, 18,000. Postage for 5. We indicate traveling for 18, for 8,000. We did some stationery for 9,000. Cleaning again for 23, indicated there. Postage for 13. You have motor vehicle expense. So this one was for delivery van, 5,000 mile services. So it's a motor expense for 43,000. You have petrol, the same 18, it's a motor expense. Then we have cleaning for 21,000, postage for 5, and petrol motor expense. So we are going to add all this. So we total them. We are going to have 77 on cleaning, 97 on expense, postage 41, stationery 26, and traveling 45. So the total of this will end up to 286. So the cash that we utilized during that period, it was 286, and we need to get a balance carried downward for 300. So this is what I was talking about, the impressed system. So this is a system of accounting which operates on a simple principle that the cashier shall be refunded the exact amount spent on the expense during a particular financial period. So we need to be refunded the 286, so that our receipts or the cash should total to 300, or what we receive from the cashier as a petty fruit. So our reimbursement on the same amount will be 286, which will bring back the amount to the cash fruit at the beginning of the period, which will be 300. So that is our petty cash book illustration and how to do it. So can go ahead and look at the general journal or the journal proper. So for the general journal, we call it, you can use the word journal or the diary, which means daily. So a journal is a day-to-day record. So for this, it is showing for each transaction the debit and credit entry in a specific ledger. So we do this is in a daily routine. So like here, the form of a journal to record a purchase for a motor vehicle. It should look like this. So you have a motor vehicle for you. We have a debit and credit from owns motors. So we can, for a narration, we can talk about being purchased of van on credit from owns motors. So that is our general journal. So we have to indicate it on a daily basis. So double entry and the ledger, you can also look at that. So increase in assets, expense, and owner's drawing account, we indicate them on the debit side on our double entry. And increase in liability, revenue, and owner's capital account, we indicate them on the credit sides. So that is the double entry rule. So for the asset, expense, and owner drawings, they are on the left. Liability, revenue, owner's capital, they are on the right. So we use the T format. So the ledger. So a ledger is a classified record transactions. So we classify records of all transactions, and we have two types of ledger accounts. We have the personal accounts and impersonal accounts. For the personal accounts, are those opened by the trader with various persons with whom he transacts business, the trader's own capital account and drawings account being included. So those are the personal accounts. For impersonal, we have it is subdivided into real accounts and nominal accounts. For real, it indicates all accounts which record transaction in property. But for nominal accounts, records revenue and gains and losses which have been taken into account in computing the profit or loss which the business has made. So those are the two different. For real accounts, transaction in properties for nominal accounts, transactions in revenue, gains, losses, which I've taken into account. So we can talk about an example of a sale ledger. So for the sale ledger, let's look at these illustrations. So you are to enter up the sale journal from the following details, post the items to the relevant accounts in the sales ledger, and then show the transfer to the sale account in the general ledger. So you have to do three things here. You have to do the sale journal, then the sale ledgers, and then the general ledger. So we start with the details. 2010 on March 1. We have the credit sales, J. Amondi for shilling 1870. Date 3, we have credit sale to G. Achieng 1660. March 6, credit sale to V. Charles 120. March 10, credit sale to J. Amondi 550. Then we have 17, credit sale to F. Mwangi. 19, credit sale to U. Akech 660. 27, credit sale to V. Sala 280. And March that one, credit sale to Kate 780. So first we have been told you are to enter up the sale journal. So we enter the sale journal. As we discussed, we have the title, date, details for you, and the amount. You can also have the invoice numbers here. So we start with the March 1. We have the date, March 1, J. Amondi credit sale, and the amount. We are going to indicate again for Achieng 1660. March 3, then we have Charles March 6 of 120. March 10, Amondi again 550. F. Mwangi 2890. U. Akech for 660. V. Sala for 280 and L. Kate for 780. Then we total them 8,810 that you shall transfer to the general ledger or the sale accounts. So then we also been told post the item on relevant account in the sale ledger. So we are going to create sale ledger of each. So for Monday account, we are going to debit all this. So the sales we debit. So Monday has two accounts, two transactions for March 1 and March 10. So we indicate both sales 1870 and 550. Then we go to Achieng. Did on sales on credit sale on March 3. So we debit her account. Charles, we're also going to debit on the sale for March 6 for 120. Mwangi account, we debit the sales for 2890. Akech, our sale ledger will make, we debit the sales for 660. Account March 31st for L. Kate 780. You can see on the debit side, it shall be blank. We leave it like that because they never did any transactions. So those are the sale ledgers. So now we transfer the total to the general ledger account. So the sale account, for the general ledger in a sale account, we also have to have these headings, the date, the details, that is on the left. On the right we have the dates, the details, and the shillings or the amount. So we always credit on the sale accounts. So we credit. So on March 1, we had Omondi. So here you have J Omondi for 1870. So you are supposed to write Omondi here. So J Omondi for 1870. On March 3, you have Jia Chien for 1660. Then you have V Charles for shilling 120. Credit that. 10. Again, you have J Omondi. Then you have March 17, F Mwangi. And then March 19, you have U Akech for 660. Then we have the V Sala for 280. And finally have L Kit for 780. So the total of this is 18. It is 8,810. So 8810. As you can see from our sale journal, that is the transfer or the total that we are making to the sale account. So we have 8,810. So any question on the ledgers, the sale ledger? So for the purchase ledger, it's all the same, but now you need to credit to credit all the purchase on the right hand side, and then on the purchase account you are going to debit. So it's as simple as that. So let's go to finally the trial balance. I'd like also we talk about the trial balance in our discussion. So the total debit balance should agree with the total of all credit balance. So the debit and the credit. So for the debit you have the expense and the assets. Credit you have the revenue, liability, and the equity. So an example we have here, this is the format. So you need to write the title. We have the trial balance as at that 1st December and the year. So for the rent income, so the revenue, so we credit. We have debtors. So all those who owe us, we are going to debit them. So we are going to debit you, Francis, all the expense, the motor vehicle, the bank, the purchases, the wages, all that. For the capital, equity, we credit creditors, liabilities, we also credit that. Then assets, furnitures, we debit. Sales revenue, we credit. Cash in hand, the assets, creditors, we credit. Expense, stationaries, all those we are going to return inwards, we debit. Return outwards, we credit. The drawings, assets, expense, and the drawings, we debit them. So then you get the total for debit and total for credit. So the total debit balance should also be equal with the total credit. Yes. So all this we are going to help you. So I think we have come to the end of our reading today. So if you have any questions, please write them on the comment. And also you can also ask for personalized teaching. I'll be glad to help, or more explanation on the any subtopic that you have not understood. So thank you. See you.